Welcome to the Agent of Wealth podcast with Mark Bautis from Bautis Financial. In this podcast, Mark helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Mark draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth podcast. This is your co-host, John Williams. Today, we're going to be talking about everything Bitcoin, but we're going to shift gears here to what most people think about when they're thinking about Bitcoin. Most people think they picture buying and holding the coin itself, of course, but there's another side of this ecosystem that's also often overlooked, and we're calling that Bitcoin mining. Many of us have heard this term, but very few truly understand it. So in today's episode, we're going to be exploring the hidden potential of this space and why it's becoming an increasingly attractive opportunity for investors. So today, joining me is Beau Turner, founder of Abundant Minds, a company built to make passive crypto infrastructure investing simple, secure, and sustainable. After transitioning from real estate to technology, Beau experienced firsthand how unreliable and opaque the mining world could be, and he set out to change it. In this conversation, we'll discuss what makes Bitcoin mining such a unique asset class, the role of energy in the crypto economy, and how investors can tap into this growth opportunity responsibly. So, Beau, welcome to the show.
Thanks so much for having me on, John. It's great to be here.
Yeah, great to have you. And I'm really excited for this topic because it really truly is it's obviously the terms you hear, the two terms that you hear thrown around, but I never really took, truth be told, never really took a deep dive myself. I have a general understanding of what it is, but I'm really looking forward to learning a little bit about really just the ins and outs of it, taking a deep dive into that and how people are investing and what you have cooking. I think it might make sense. Many of our listeners may know a little bit more than the next, but it might make sense for us to just lay some groundwork and talk in simple terms and just get into what Bitcoin mining really is and how it fits into the broader crypto ecosystem.
Yeah, of course. Well, mining is the backbone of how Bitcoin works, how it's secured. The reason that it has value, among other things, is because of the mining process. And just to simplify it, mining is essentially just taking a raw resource, which is energy, running it through a refinement process, just like any other manufacturing process, and turning that energy through a computing process into a finished product, that finished product being Bitcoin. And the purpose of mining is twofold. It's to secure the network from outside attackers, to actually put up a wall around your wealth, call it the castle wall around your treasury. And it's also to help move value across the network. So miners are actually performing the same function as like a payment processor would, where they're helping to move Bitcoin from one address to the next. If I wanted to send you funds, you wanted to send me funds, miners are actually facilitating that process and getting paid to do so. So while you might conjure up an image of someone with a pickaxe going underground and getting this raw material out of the earth, mining in the realest sense is more like a protection mechanism and a value transfer mechanism than it is an extraction mechanism. So just want to put that out as the groundwork. There's so much deeper that we could go, but hopefully that gives you a foundational layer that at least is accessible to most people.
Yeah, I mean, I couldn't believe, obviously leading up to this, I did some research myself and how many layers there were, like I guess like the halving and hashes and obviously it's super technical and reason being like there's just how people are coming together with I guess they call them pools and just the amount of energy and resources that goes into just figuring out like one of these complex mathematical equations, if you may. It's really fascinating stuff, like what's going on underneath the hood. Before we started this podcast, we had a little time to talk, and I hats off to you and going all in this industry, and kind of it sounds like you're in the real estate investing background. I'd love to hear just really quickly before we kind of shift into some of the more of the details, is what drew you towards Bitcoin mining and what made you see its potential as an investment opportunity.
Well, before this, I was in real estate full time. Before I was in real estate, I got an engineering degree. So always had a technical lens of looking at the world, but As much as I wanted to found my brilliant startup right after engineering school, I didn't have the $1 billion idea. I didn't have the personal pain point. So I went into real estate, which was something that I had experience with, my family had been a part of, and I had some early deals that I had done and just kind of scaled that into my own business. And around 2020, I had been exposed to Bitcoin for years and owned some, but was not deep in the space. I mean, nothing close to full time, just a understanding and appreciation of its value. But at that point, 2020 was a very interesting year in the markets and taught me quite a bit about what actually holds value, how money moves, what actually backs our monetary system. And it forced me to look deeper. And so Bitcoin came to the fore for me again. I fell pretty deep down the rabbit hole that year. And what happened was I saw the reason to start shifting out of real estate and into Bitcoin, but I didn't want to get out of a cash flowing asset and into just a growth asset without having some way to make an income. And for those of your listeners who don't know, if you're just holding Bitcoin, it's appreciating very quickly, but it's not throwing off income unless you're lending it out and getting income that way, or doing something else synthetic. So mining is the only natural way built into the network to actually create Bitcoin denominated income. And it appealed to my engineering sensibilities. It appealed to my real estate sensibilities because it is this well-defined, automated, and mathematical process that generates a recurring and reliable result and mirrors real estate in a lot of ways. You've got this physical asset. You've got what amounts to a rental payment from the network for you performing work for it. You get the depreciation benefits of owning something physical. And you've got what I was so reluctant to let go of in real estate, which is this cash flowing asset. I made the venture into mining, one, because I saw the promise in Bitcoin, and two, because I wanted it to be an income stream, not just this highly fluctuating volatile asset that I might lose sleep over if I felt like I didn't enter at the right point or exit at the right point. And the first experience I had in size with mining, unfortunately, was being a customer, like what we currently offer to our customers today, but with a company that unfortunately did not treat me and my wife the right way. So that was a $500,000 loss event for us. That's a long story in itself, but suffice it to say, after that experience, we built our own data center here in Oregon to scratch our own itch and manage our own income stream and make sure that it was operated well and eliminate that counterparty risk. And then after we had decided on that, built our first data center and filled up our own miners, we opened the facility to other people and started offering the service that we originally were looking for.
So I don't know if this is like an easy question to answer, but is like what is the relationship between the investors? Are they set up as partners? Like what's the structure of the business? Are people being issued K1s through the profitability?
So that's the wonderful thing about it is it's set up as a pure service provider relationship. And when we do it that way, our investors, I mean, it's probably more accurate to call them clients or customers, because investor kind of gives you the sense of it being a passive activity that you have no control over. But in reality, our customers are owning their own mining business. So they actually purchase equipment from us, usually in their own LLC. We operate it in our facilities, so we're maintaining it. We maintain it for a flat fee, and they get all of the Bitcoin that those miners produce. So you can think of it in the same way as like a franchise business where you've got an installed operator and an operating system and all of the ways that you're meant to build that business so that it takes minimal time and cognitive overhead jumping into something new. And it's just handled for you. But because it is your own business, because you are involved in the strategy, the setup, the risk taking, the education, understanding, and decision making, it qualifies under one of or two of the IRS publication 925 requisites for material participation. So having the depreciation benefits in 2025, 100% bonus depreciation, you can qualify for material participation and offset ordinary income. And that's one of the main benefits that people get into mining for, even outside of the income, the outperformance of Bitcoin, is the ability to get this tax benefit that's not present if you're just buying Bitcoin on the open market.
Yeah, there aren't many. Like I think I have. It's funny. I was talking with a client the other day, and he was trying to get his wife get her a real estate license so they could start to work that angle, because it's one of the only places you can get that quick depreciation. And then others will look into gas and oil, and there's obviously a lot of complex things. So that's actually great to know, because I think there will be a lot of people who are interested in, especially those high income earners out there, to net down some of that ordinary income for sure. Is there an aspect to this that makes it timely as far as the opportunity is concerned? Like, that makes it more attractive, and is it something that's new? Like,
Well, there's actually a lot of converging timely trends that are hitting. I would say one that most people are probably aware of is that finally this industry is supported. The administration that's currently in is very supportive of the crypto industry broadly. Trump's sons are both involved in a Bitcoin mining company. So if you can watch what people do and not what they say, that's something that they are doing and seem to believe in investing their time and energy into, is mining specifically. The other thing I'll say is we're at a very interesting point where I think mining has become highly de-risked, where it's moved from this very speculative, volatile industry to something more like real estate, where the early adopters, the innovators really like to see massive upside from this kind of new and emerging industry. But I think we're entering the period of institutional adoption where returns are much more stable and still very strong, but not quite so volatile. So what is less attractive to people who are heavy risk takers and like to make bets on emerging technology is sort of going away in favor of more like utility or monopoly income, which I think as long as you've got a good operator, as long as you've got great energy procurement, this is going to be a very stable way to get a Bitcoin denominated return for the next at least 10 years, I would say. And the next 10 years are significant because most of your listeners may not know, but out of the 21 million coins that will ever be mined in the next 20 days, so I'm not sure when this will air, but by the end of November, 95% of all of the Bitcoins that will ever be mined will have been mined. And then over the next 10 years, out of that last 5%, we get 4 of them. And then we'll spend 100 years going after that last 1%. So I would say we are squarely in the digital gold rush of people getting the most bang for their buck in the mining space at a time where it's been heavily de-risked. And that's part of why I'm so excited, is that this is converging on so many different trends, both within and without the Bitcoin space. The other being the interaction of Bitcoin mining and AI, which, if you haven't been following, has been very interesting in the public markets of Bitcoin miners pivoting to AI. Large companies like Google buying Bitcoin mining companies or buying stakes in Bitcoin mining companies. Just so much activity that's making this not what people do in their garages or spare warehouses, but a truly institutional activity.
Yeah, that kind of reminds me of when it comes to just Bitcoin in general, whether you're purchasing a Bitcoin itself, Bitcoin mining, just Bitcoin in general, or just coins in general. It's a complex concept, just from the top down. And I feel like you get this black and white, fan or no fan kind of split with, and then a lot of times I feel like it's connected to those who are risk, like the risk tolerance of the person. So, we have clients who have their, they're really interested in just whatever it is, Bitcoin, because they have an appetite for that volatility that we've seen, and just, even if just them owning the actual coin itself. With that said, is there anything you could lend to, like the misunderstanding of Bitcoin mining, like some of the things that you hear that, maybe some of those who are skeptics might be interested in hearing?
Well, for people that haven't been following it, I mean, the last couple of years have been massive for the industry at large. And I personally, just to clarify, only really focus on Bitcoin. I had several years early on where I was more broadly in crypto, but realized that on balance, it's mostly a distraction. I do think there will be interesting things that come out of the rest of the crypto ecosystem, but nothing that is solving the total addressable market of sound money or store value assets, which makes up, of the 900 trillion or so of global assets, the largest base of total wealth in the world, of which Bitcoin's only taken a fraction of a percentage point. So I think that is the biggest opportunity. And we still sit on the very early end of that curve. For reference, Bitcoin at this point is about a $2 trillion market. That's on par with, the largest tech companies that we have in the world. I want to say NVIDIA is like 4 or 5 trillion at this point, with Google, Microsoft, Apple all falling in that 2 to 3 trillion band. And then to compare that to another store of value asset, the people often compare Bitcoin to gold, which has been on a run lately. Used to be around 20 trillion in total market cap. I think with the recent appreciation, we're up to around 25 or 30. So if all we did was get on par with what most people would consider the ideal sound money, gold, there's still a 10x. And if you got on par with store of value assets, which you could argue are anywhere between 200 and 500 trillion, there's still more than 100x in terms of upside potential. And yet, institutionally, it's been de-risked hugely over the last few years. You've gotten a ton of market clarity. You've got a ton of regulatory clarity. BlackRock has launched an ETF, the most successful ETF launch in history. There's over $160 billion in these Bitcoin ETFs in the markets. You have an administration that's very favorable to it. They've talked about and even signed an executive order creating a strategic Bitcoin reserve where they have to hold every coin that they currently have, and any new seizures they have to hold. So I think we're entering this phase where, despite it still being a tiny market in the context of global assets, it is global, it is liquid, it is understood, it is becoming more well-regulated, and yet still most people don't have any of it and don't understand it. And so I think that is the perfect blend of qualities in investment where not just speculators and risk takers, but people who are very serious about managing their own money can start thinking about 1%, 5%, 10, 20% of their assets going into something like this or something related to this without feeling like they're making a heavy speculative bet.
Yeah, I definitely started to feel that shift. I mean, from an investor myself, like it's nice to see like the stabilization. I mean, it's been a roller coaster ride, but even just in the past couple of years, to see the stabilization and this disconnect from the market itself. But with that said, it's still a risky asset, and like just anything, there's no free lunch here, and there's obviously risk involved. How did your team manage those risks, like whether it be like energy cost to equipment to market volatility and so on and so forth, when you're obviously your own portfolio, but like working with other investors as well?
Yeah, of course. Well, the main thing that we have to manage on the mining side is our energy costs. So it helps that being in the Pacific Northwest, we've got access to hydropower, which is one of the longest duration, least volatile sources of energy that you can procure. In say 2021 and 22, there were a lot of people who had their primary energy source as natural gas. And unfortunately, the hikes in those prices over a really short period of time put a lot of miners underwater. So even more important than short-term profitability is long-term stability. So that's part of why we choose this region. The other thing that can mess you up is, even if you've got great energy procurement, if you're in the wrong environment, say you don't have a good operator, you don't have a good climate, if your machine doesn't last as long as it can, then your investment has a shorter life. So that's another reason that we're in the Northwest, is that we've got one of the most ideal climates where we have very low incidence of natural disasters. We've got very cool, stable temperatures year round, very clean air. And then our operations team is making sure that people are online at least 95%, but typically 98 to 99% of the time, which you can't say about other regions that face curtailments, huge heat waves. Like, for example, most of the network in the US is based in Texas, and Texas has one of the most, let's call it, flexible grids where pricing varies very strongly seasonally, and you see miners curtailing to adjust to what happens in that power market, as well as preserve the integrity of those machines. That means that they're often down 5, 10, 15, maybe even 20% of the year, just to make sure that they aren't overpaying for energy or running during heat waves where temperatures go well over 100 degrees. So that's something that we're not really subject to, and we can keep a really high uptime. Those would be, the primary risks. I would say psychologically too, one of the reasons that I got into mining was people, when they're getting into Bitcoin in general, think, am I buying at the right price? What is this a reasonable time to get in? You see a lot of psychological volatility when people have to enter at a certain point in the market and then stay with their bet. And the benefit of mining, and this is for me personally, because I will be the first to admit that I'm not a good trader. It is not my personal psychological bent to be very good at timing entries and exits. Mining allows you to consistently procure the asset at a discount. So instead of going out and buying Bitcoin on the market at 120,000, I am consistently dollar cost averaging through an electric bill at a discount because I'm getting it at production price, not at the market price. So I most days might be producing a Bitcoin for closer to $60,000. And that means that whether we're at 120 or 100 or 85, I'm still in the green because I'm just creating a discounted asset day in and day out. And so when you talk about risks, I mean, one of the biggest risks to any investment is the investor themselves and the mindset that that person carries into the investment. And especially when you think of something like this that most people don't understand, if they feel like they've made a bad move and get shaken out, that's often exactly the time when they should be doubling down, and having as much buffer as you can in that psychological event is a huge benefit long term. So even if people own huge amounts of Bitcoin, and I do encourage people to just go out and get a position in Bitcoin, whether you mine or not, I think mining helps you ride out the volatility because you have that long-term mindset, because you have that infrastructure mindset, that producing a long-term asset at a discount mindset that helps offset this sense of, am I doing the right thing at the right time?
So while we're on this topic of energy, I've heard some criticism of Bitcoin mining, and it's the amount of energy that it takes to operate. But it's my understanding you can make a case that it may actually be better for the planet. Is maybe while we're on this topic, you could extrapolate on that.
This is something that we could spend days talking about and never fully unpack. But the short answer is there's never been a wealthy or prosperous civilization in history that didn't also have abundant energy. And there's a straight line correlation between the ability to channel and harness energy and the amount of prosperity you're able to create for a society. And so I believe that there's this narrative that's been popularized and that is bred out of a lot of misunderstanding that we should use less energy, and anything that uses more energy is a bad thing. And the main thing that I will say to counter that is that we already waste a ton of energy. And so to the degree that we can actually make use of wasted energy, we're actually improving the efficiency of the system as a whole. And just for reference, Bitcoin mining uses less than 1% of global energy. It's genuinely a rounding error. I mean, depending on the day, that percentage point is less than what you could statistically characterize as a percentage point. So the day-to-day fluctuation of energy use is more than the entire Bitcoin network. So it's effectively a rounding error. And every electron that we put to use that otherwise would have been wasted is bringing efficiency to a system that informs every other part of our economy. So you and I depend on energy as the input for everything that we rely on in our lives. And every bit of wasted energy that doesn't get used by someone and monetized or paid for is contributing to it being delivered at a higher cost for everybody else. So we're actually going through and making use of energy that in many cases otherwise wouldn't be used. I mean, people that aren't aware, Bitcoin miners are the most sensitive to price of any energy consumer on Earth. And so we have to go after the resources that otherwise aren't going to be utilized and make those resources more efficient, monetize them. There's a stat that putting a Bitcoin miner at a renewable generation facility like a solar or wind farm actually increases the profitability of that resource by up to 120%, which means that if you integrate Bitcoin mining into the renewable transition, you actually can accelerate it and not just make it more profitable, but remove the burden on the taxpayer that subsidizes that transition in the meantime. I mean, anywhere that you can bring natural profitability and economic viability to something that's subsidized, you actually free up resources that otherwise are a drain on all of society. So that's a couple of points to talk about. You know, just as a brief example, a lot of people like to hate on Bitcoin mining, but there's a great story that illustrated this point perfectly. In Norway, there was a town that had a Bitcoin miner. They're about 20% of the consumption on the system, very reliable customer, and the community didn't want them there. So they decided not to renew their permit to do business. The day after they shut down, the electric rates for the entire community went up 20%. because they lost a tenant that was consuming, spreading the cost of the utility across a wider base of energy usage. And all of those costs had to be borne by somebody. So they were borne by the remaining consumers. And it goes both ways. If you integrate a Bitcoin miner into an energy system that isn't at full utilization, you can actually lower costs for people. So while many will think of this as an extractive industry that's taking all of the energy away from other consumers, the truth is, when it's integrated well, it is such a net benefit to every other consumer on that same system. And especially in the way that we operate, often brings tech jobs to rural communities where they otherwise don't have much opportunity to get into a tech forward industry. You get a chance to optimize, as we said, the local energy situation. In the Northwest, we have this awesome fringe benefit of being able to reuse our heat. So we actually use the heat coming off of our data centers to heat greenhouses throughout the winter and grow fresh food. And all of these awesome side benefits that don't get talked about, but are part of what I like to term as Bitcoin mining focused impact investing. This is such a holistically good industry for our communities, and unfortunately has been villainized for the last few years. But thankfully, I think that we're at the turning point of that.
There has never been an advancement in technology that hasn't been hated on, right? It's all part of the game. I mean, even it's always a thing.
I like to think about, electricity is a great parallel for this. 15 years into electricity being on the scene and out in the public, people thought of it as demons in the wires. And we're 15 years into Bitcoin. So we're still in there's demons in the wires phase of Bitcoin's adoption. And I'm just excited for when more people understand more about it and understand the usefulness and utility to them.
Yeah. For me, it was the cassette tape. I was convinced that the compact disc was never going to catch on. So I held on to the cassette tape for as long as I could until I walked into Sam Goody one day and there was no more cassette tapes. So let's put ourselves in the shoes of the investor. So here I am. I have a portfolio, and I'm really interested in Bitcoin mining, and I have a little extra cash and I want to diversify into this space. What does that look like? And then is there a particular type of that you find that you're finding is a particular, is it institutional? Like what's the investor look like?
It really runs the range. I mean, in our company specifically, we have hundreds of clients, and they range from individuals with a single machine, young professionals, even grandmothers and grandfathers, up to, smaller private equity firms, hedge funds, family offices, high net worth individuals investing on their own, and people owning from a single unit down to our lowest end right now is about $6,000 up to, I think our largest client has just over 500 units. So, really runs the range of what people are getting into this for, who they are, what their profile is. But by and large, it's in the context of a business. So people are typically not doing this personally. They're setting up either a purpose-built entity, or they're integrating it into an existing business of theirs because of what we mentioned earlier, which is those material participation and depreciation advantages that come from you having this as an active business.
As far as minimums and if someone is there, I mean, obviously if you're talking minimums, you're probably not, if it's a concern, then it's probably not a really good space for you. But what does a typical investment look like and getting started?
At the minimum, we have 3 different machines that people pick, and there's different reasons why you would pick one, but let's just assume that you go for the most efficient, which right now is about $8,500. The lowest end being just over $6,000 per unit. You can get as little as a single unit. So, let's call it a minimum entry point of about $6,000. Our typical investor is usually getting somewhere between 5 and 10 units. So depending on which unit you're getting, usually looking somewhere between $30,000 and $100,000 is the most common.
Okay.
And people are getting those units. They are actually purchasing those from us. So they own those units themselves. They live in our data center. They're operated by us. Each one of those units has a fixed fee every month. That's the hosting fee that covers electricity, that covers maintenance, labor, spare parts, anything that happens with that machine that needs to be taken care of, that's covered in that flat fee. And a typical machine that someone buys If you're expecting that Bitcoin does nothing for the next few years and that we live in a very boring vacuum, usually you're getting your money back within 3 years. The people that invested at this point last year in machines have already broken even, especially if they held onto their coins, which we always recommend. I recommend this to people not just as a cash flow strategy to live on, but because of the opportunity cost of selling Bitcoin, really is just a more efficient way and a more tax efficient way to accumulate a Bitcoin position. So that goes into the investment mindset. But if you're just running it based on cash return, usually a 2 to 3 year return on investment period, and the life of those machines is anywhere from 5 up to 6, 7, 8 years if they're well taken care of and economics hold.
So after that time period, like the machine is deemed useless, and so the internal rate of return includes the idea that you're not necessarily going to get your initial, you're not going to sell those machines and get like an influx of cash. So you have to, the idea of the business is going to be enough cash flow to kind of cover your initial investment plus what you're, and then after that time period, you're just kind of like closing up the well, if you may.
Right. Taking the long-term view, you're looking at periods of reinvestment. So you're buying machines up front, you're cash flowing them for several years, and then 2 to 3 years in, we usually have people either add to the portfolio. I mean, you can start doing it before then, of course, you can scale in every month if you'd like. But around 2 to 3 years in, it makes sense to look at the efficiency of the newer machines on the market and think about doing what we would call a fleet refresh, where you're taking some of the capital in your existing machines and your existing fleet. They're not fully depreciated yet. You haven't lost all market value. You can still resell them, but you can leg up into a more efficient unit and keep the overall efficiency of your fleet competitive with the market. And over the long run, that definitely outperforms just buying machines, running them till they're dead, and then starting again if you're just consistently upgrading the efficiency of your fleet. And in an average year, again, assuming that we're talking about Bitcoin being in a vacuum and no price appreciation, nothing happening with the network in terms of difficulty increase, you're looking at anywhere between 25 and 35% returns a year on that machine, just in terms of that cash value of Bitcoin. But the important thing in this is you are receiving income as Bitcoin. So as long as you hold on to that Bitcoin, it continues to compound as long as it lives in your portfolio.
Well, this is and again, I feel like we could talk about this forever. There's a lot of great information. Before we send you on your way, is there anything you feel you want to add? Is there anything that people overlook with Bitcoin mining? Anything that maybe we didn't touch on that you feel like might be important to leave our listeners with?
What I'm most passionate about in this space, outside of the impact that we can have on communities, is what we can do for investors in terms of building understanding. So most people, even people that own quite a bit of Bitcoin, don't understand a lot about what they own. And so mining, to me, I personally was not that interested in having an engineering job and was not that passionate about engineering when I got out of school. And mining brought it back to the front as this amazing way to shape our resources in the built world to more efficiently channel energy toward creating an outcome. And I think that mining is one of the greatest teachers of technology, of energy, of the reshaping of the financial landscape that we have available to us. And so even if people already own Bitcoin or they don't own any Bitcoin, I think that mining alone is this great teaching tool to help understand the investment environment. And it plays into all of these trends that we're seeing in AI and data centers, in energy availability, in these vast changes in financial markets and geopolitics. I think that we sit at the intersection of all of those things, and that whether someone has a huge position in mining or just a single machine, it gives you a window into learning more about how the context of today's world is going to shape your investment philosophy over the next several decades. So just want to leave your listeners with, if you do nothing else, getting a miner or getting involved with mining, even at a casual scale, is something that can teach you a lot about the rest of your portfolio.
Great stuff. With that said, how do people get in touch with you? Like, how do we learn more? Like, how can they reach out to you? And quite frankly, if I have clients that might want to get interested, like what's a good starting place, and more information, anything like that you could share?
Yeah, of course. So the easiest way, if someone hears this and wants to like go through an individual consult is to go to our website, abundantminds.com, and book a call with one of my team members. This is very much a consult to understand your goals, understand if this is a fit, and see if there's a strategy that uniquely suits your setup, because no two people have the same setup, the same goals, the same reason that they're doing this. And so that's a great way to get started and get more information and plan of action for your individual circumstance. If you want to learn more, because there is so much more to learn, we do have a YouTube channel with quite a bit of long form content. We have our own podcast as well, where a lot of industry experts have come on and shared their wisdom. You can find that at Abundant Minds would be our handle on YouTube, as well as all of our other socials. So X, LinkedIn, Instagram, any of the social platforms, our handle will be at Abundant Minds, and would love to connect with you there, and tons of education to be had. So love to share that with our audience and look forward to getting a chance to work with some of them.
Yeah, excellent. Yeah, I look forward to staying in touch with you, and I congratulate you on this gutsy move into the business. Obviously, you're very passionate about it. I wish you luck with that. And we do have clients listening. You want to learn more about this, obviously set up a call with us. You know where to find us. And yeah, thanks for joining me today, Beau.
Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.